Hey everybody, I want to discuss in this video and teach you guys how to get a business line of credit without going to the bank. What we'll go over is what are the benefits of a line of credit, what are the qualifications, and how do you improve those qualifications so you get a better line of credit. What's the process, and then how to use it, and what's needed to apply, right? All those things are very, very important if you want to get a line of credit to help your business grow. All right, so let's talk a little bit about the benefits. First off, a business line of credit is going to help build your business credit. It's not going to go on your personal credit, all right, but your personal credit will play into it a little bit, and I'll explain that when we talk about the qualifications. All right, you can access it at any time, meaning as long as you have available room and equity to draw from the line of credit, you can go in and get more money whenever you need it. And it's a simple interest-bearing program. What that means is, as you pay it down, if you pay it off early, all the remaining interest is waived. And why does that matter? It's a much cheaper way to finance things like, inventory, marketing, adding employees, adding staff. And I'm going to show you guys how to use a line of credit to your maximum benefit at the end, because I think that's very, very important. Okay, so let's go over what are the qualifications for a line of credit, and then we'll talk about some of the terms, right? So there's a few lines of credit that we offer that I've worked with in the past at Sprout, and some of them you can get after a year, some you need 2 years in business, okay? Let's just say the time in business is at least a year, right? Your credit score has to be at least 650. There are some give and take exceptions on this, but it's important to understand 650 personal credit or better. All right, what they're really going to look for is how much your revenue is on a monthly basis. So they want to see you doing at least $30,000 a month every single month going into the business bank account. They want to see a certain number of deposits. Why do they want to see a certain number of deposits? Because it makes your business look more stable. If you have 2 or 3 deposits, you might have a high concentration of a low concentration of customers, meaning you might have 1 or 2 main clients. You're probably better off using a program like invoice factoring. However, they want to see at least 10, 15 deposits a month is preferable, okay? They want to see good cash flow. What does it mean to have good cash flow? Well, if you're doing $30,000 a month and you keep $30,000, not $30,000, if you keep $3,000 in there, that will be helpful, right? They don't want to see negative days. They don't want to see balances or days where the balance is either negative or under, call it $500, right? Because then they're afraid of payment issues, okay, even with the line of credit. So that's very important to understand. So basically, let's recap. 1 year in business, 650 credit, $30,000 a month in revenue with 10, preferably 15 deposits and good cash flow. Right, if you have that, you have a really good shot at getting a line of credit. All right, now, what are the terms? Terms on lines of credit can be 6 to 24 months, and they're either going to be weekly payments or they're going to be monthly payments. There's no in between. It's weekly or monthly. There's a 6-month, a 12-month, an 18-month, and a 24-month. Okay, and the rates are all simple interest. They start out at like 6% simple interest, and they go up into the teens and into the low 20s. It really depends on how you score out. And what I tell everyone is we'll walk you through that entire process with how you scored out and what's the best available line of credit that you can get for your business. The good thing is once you use it, they can always increase the limits. Okay, typically, the limits start getting, you can get 100, 150, 250,000, and the more you utilize it, the better, the more they'll work with you in the future. Okay, now what's the process of getting a line of credit? It's pretty simple. All you're going to need is a 1-page application. You're going to need your last 6 months of business bank statements. You're going to need a driver's license, and you're going to need a voided check. All of that, and the tax return, your most recent business tax return. If you have all that, you send it in. It only takes 24 to 48 hours to figure out how much you're going to get approved for. And then from there, we set up your portal. And then anytime you need money, you go in and you draw. All right, so it really is that simple to get a business line of credit without going to the bank. A lot of people think you have to go to the bank to get a line of credit, and that's simply not true. All right. Now, How should you use your line of credit? I get asked this all the time, and this is really, really important. A line of credit should be used for short-term capital needs. What do I mean by that? If you're adding staff, if you're growing your business, you're scaling your business, you want to do that. You want to add employees as often as you can if they're having a positive impact on your revenue, right? So if they're paying for themselves, obviously you want to add them. Same thing with inventory. Inventory is something you need to buy every single month. So using a line of credit to buy inventory and then pay it off once the inventory sells and then you make your margin, that is a very, very good use of a line of credit. Marketing is another one. If you are putting your marketing spends on a line of credit, you're increasing your revenue, you're increasing your sales, you pay off the line of credit, and then you just rinse and repeat. You keep doing that process, right? And that's how you grow your business. That's how you build business credit. What shouldn't you use a line of credit for? This is important. You shouldn't use a line of credit for a truck. You shouldn't use it for an expensive piece of equipment. You shouldn't use it to buy a building. Why? Because you're going to use a truck, for at least, call it 3 to 5 years. You're going to use a building, hopefully for, at least 10 to 15 years. So you should be paying for those items over the time you're going to use them. The reason a line of credit is so good is because you can access it at any time, and you're using it to build your business and using it for short-term needs. If you needed a truck or you need to buy a building, if you need a truck or a piece of equipment, you should use equipment financing, okay? Because those terms are going to be anywhere from 1 to 5 years. Usually they're 5-year terms. If you're going to buy a building, you should really use an SBA CRE program. And the reason I'm telling you that is because, one, it's a very cheap long-term program. And two, it doesn't make sense to tie up your short-term needs on long-term programs. On the flip side, you shouldn't be using an SBA program, an SBA loan for marketing and for adding staff, because you're going to need an inventory, because you're going to need to tap into that again. And when you're paying it over 10 years, you're not going to be able to redraw on that. So a line of credit for those short-term needs, and for long-term needs, either equipment financing or an SBA loan. All right. So let's talk about what's needed to apply. I just want to touch on that again. All it is 6 months of your business bank statements. You're going to need a driver's license, an application, a voided check, and the business tax return. All right. And it usually only takes 24 to 48 hours to get set up and to get approved. So I think everyone's goal should be to get into a line of credit. Now, if you're not there, if your credit isn't there, right, what do? You should use credit repair in order to get your credit score up and to start building that business credit. It's very, very important that you understand the difference between personal credit and business credit. Personal credit you use for almost everything, and it does tie into play when you're looking at getting business financing. It's not as hard as people think to build business credit either. You just have to open business accounts that are going to report. They're going to report to Dun & Bradstreet. They're going to report to NAV. They're going to report to Experian. By you opening these accounts, it's much easier to build your business when you have business credit, because then you're not tying up your personal credit. One of the things I did not mention earlier is when you have a business line of credit, it does not get reported to your personal trade lines. What does that mean? Well, if you go and you have a business line of credit for, let's just say, $100,000, and you have $80,000 of it out, that is entirely on your business. Why is that important? Because if you go to apply for a house or apply for a car loan, what's going to happen is that's not going to come up, so it doesn't affect your debt to income ratio. All right, in a situation like that, that's ideal, because you don't want to have to, postpone buying a house or postpone getting a car because you have a lot of debt. A lot of people fall into the trap of they build their business on personal credit cards. All right, and what that does is it drives down their credit score. So when they do need business credit, it's much harder to get good business credit because they have higher utilization on their personal credit. Okay, so when you're in business, one of the first things you should try to do is establish really strong business credit, and a great way to do that is getting a line of credit. I hope you guys understand and enjoyed this. If you have questions, please leave them in the comment. I promise I will respond to all your questions. And if you want to know more about an SBA loan, that's the next video you should watch. All right, so just go to the SBA video and I'll break down everything that you need to know about getting an SBA loan.